Why, hello everybody. How are you doing?
Welcome to another week where we're looking at the earnings reports you gotta watch this freaking week. Starting August 7th. You know it's 2023. You already know what year it is. Don't even pretend. You know what? Fantastically massive earnings last week, no doubt. But yet again, we got hammered. We got hammered. Absolutely destroyed last week because of some nonsense. Fitch lowering the US's freaking credit rating. Are you kidding me, Fitch? You know what? You kind of are sounding like a maybe something that rhymes with your own name. That's right. You're a snitch. You're an absolute snitch. That's what you knew I was going to say, isn't it? F you, Fitch. You snitch. Okay. Anyways, let's hope for some better stuff this week as hopefully investors shrug that off. You know, we had three not great days here in a row, two pretty ugly days, and then Friday wasn't too exciting. Even with some great earnings kind of baked in there, actually. But let's get schmacking on these earnings and go from here. As per usual, I've got three main ones that I'll be looking at. Um, and I hope you'll be looking at three main ones too. But I'm actually only going to focus on two of them here today for the video. I'll talk about some other ones. But let's get right into this, baby.
Here we go.
Okay, starting Monday before open. I'm not too excited here, right? Nothing too crazy. We've got Viatris, Cosmos Energy, Tyson, officially the most boring company at all to follow. I mean, there's no doubt about it. Actually, was slightly interesting to follow, when we go back to 2020, just because of the inability to get any frozen chicken. Motorcycle just drove by. Guy's got a wiener probably the size of a toothpick. Does it every night. Usually going to be, around 11 p.m. Dude has to do joyrides around the neighborhood with his tiny little wiener. One of these days, I'll bring out the baseball bat and wait for him, sit behind my car, wait for him to pass by, and just absolutely clobber him on the way through. That's not real if it happens. That was not proof. There's no evidence here. Anyways, Tyson, it's frozen chicken. I mean, is there anything exciting about the company? There's not. But that's okay. Doesn't need to be exciting. Then Elanco finishing that up. Look, we get a little more exciting when we go after close Monday, starting with Palantir because you know what? It's a pretty exciting one in the fact that the stock is absolutely nutty this year. I mean, the thing's going crazy. So earnings, no doubt, is going to have a big impact, right? We'll be paying attention there. Not one I hold, not one I necessarily plan on playing, but I would expect volatility in either direction depending on these earnings. I mean, this is not one that would shock me if it moves 5% in either direction because of this. Just no doubt at all. I don't follow the company enough to tell you which direction it's going to move, unfortunately. But hey, let me tell you, I've been, kind of getting them right a lot lately. Just saying so. But that's why I don't make picks on every stock. I only make them on the stocks that I follow because I don't, you can't follow every single company and know what they're going to do, okay? Following them we've got Lucid Air. Lucid. How do you feel about them? Um, you know, I don't like too much about them just yet. Again, we talk about the lack of profitability. We talk about all that matters here at the end of the day for this one is deliveries and what their guidance is. That's all that matters for this company. Just being frankly honest, it's true. Paramount, Paramount Global. I mean, there's nothing I find too exciting with Paramount. Now we do have the benefit here. Should be included in this quarter of some decent theatrical releases in which they've performed pretty well. Um, Obviously, they will still talk about since technically now it's a streaming company. They're going to be, hurting from a profitability standpoint, as we've seen with Disney, who reports later. Um, Paramount Plus, though, let me tell you, it's a really bad application. I just got to be honest with you, it's really bad, and I do think it's something at some point, which again is why Warren Buffett's involved in this one. They're hoping for some arbitrage and someone buys them out eventually, and I think it's a possibility. I really do. I've talked for a while now about the consolidation of streaming, and it's getting there, right? It is going to get there, right? We've already seen Discovery Plus fold, be brought into HBO Max, and now they're just Max. They're no longer HBO Max. They're just Max. Anyways, I watched some Shark Week lately. Did you guys watch some Shark Week this year? I watched a little bit. Okay. Then we get into a company I've been poo-pooing for the last 3 years, and you want to know why? There's a good reason. The stock's absolutely cheeks, right? This stock is cheeks, and I'm not talking about them beautiful, rounded, just voluptuous cheeks. Um, and I'm talking about my own, by the way, in case you were curious. You know, I'm a man who's about to be married. I can't be looking at other cheeks. It just doesn't happen that way. Now, face cheeks, maybe I could look at those, but we're talking about the behind variety because let me tell you, that's what Beyond Meat smells like. That's what the product smells like. It's what it tastes like. It tastes like absolute cheeks. Some people like eating cheeks. I don't. Um, nope, sorry. We're talking about the stock here. Look, the reason I say it, and I've said it for a long time, the company is hemorrhaging money. In a time in which the economy is doing very poorly, they are hemorrhaging money. And that's not a good sign, right? It's really not. Because at this point, to raise capital, they're having to offer bonds at ridiculously high rates, right? That's what struggles for, or what sucks for these companies right now with interest rates being so high. If they want to raise capital, it's going to have to be at extremely high rates. And if they're already losing money hand over fist, which they are, it's beyond meat, right? We're talking about an earnings per share basis consistently, and this quarter may be a little different, but on an annual basis, consistently over $4 loss per share. That's massive, by the way, for this company. I mean, we're talking about hundreds of millions of dollars this company consistently loses. Now, they have been improving, but we're still years away, it feels like, from actual growth here and possibly profitability. And the concern then comes when you look at a company like Tattooed Chef, who continued to just not really post any profit and not post any growth in revenue. They went under. They're bankrupt. Beyond Meat, now what's good for them is they have some extra partnerships the Tattooed Chef maybe didn't necessarily have. They've got their Beyond Steak recently released that's going to be featured in Costco, which is big for them, it is. But the market for these products is still very heavily limited. I've said it from the start, and that's why this quarter is expected a pretty significant revenue decrease, right? The market is it's just very limited. It's not like your vegan market is going to continue to grow at massive rates. It's just not. At the end of the day, the people eating meat are going to continue to eat meat. Very few of them would convert over, right? It's just not going to happen that way necessarily. Not only based off of pricing of the product, but also lack of availability and choice is also there too. I mean, it's just something to consider. Some people have to eat this way, and that's fine. And that's the people that are going to mostly be purchasing these products. The avenue for growth is just very limited, right? That's what I say consistently. And with inflation, the company's getting hurt from a profitability standpoint. I don't like the stock here. I just don't like it. I've said it for a long time, and I've continued to be right on it. I hate to call myself out, toot my own horn, but here I go, give myself the Glock 3000. I'm tooting it so hard. I just haven't liked the company for the last 3 years, and it's down 70% over the last 3 years. What else do you want me to say, okay? What else do you want me to say? I'm staying away from it still. That's just what I'm telling you here. Then we've got T2 IO Systems. What the F are you? I don't even know what that is. Get out of here. Chegg. Not much to say about Chegg. I don't follow it enough, and I know the stock's got a lot of wild price action going with it as well. You know, there's benefit here for Chegg. I mean, there is. You know, things are good, but it's also one of those where, again, I got to be honest with what they offer. It does limit really the total amount of revenue that they can grow just based off the offerings of the company. The way it's laid out right now, really almost subscription based to an extent. I mean, it really is when you think about it. And that limits them in terms of revenue growth, which with a company trading at a high multiple just makes it tough. And relatively not great in the profitability market. So I don't know what that was, but something just exploded. You know what? I can't make that joke because I did say that last time. Actually, it wasn't during a video, but I was just at home, and actually the house did shake completely. And it turns out, just down, I swear to you, down the street, a house legitimately did explode. I mean, 100% exploded, and I didn't realize it until I watched the news later. A house literally exploded. Then I walked by and turns out the house was literally imploded. Everything caved into the basement. Most likely, when that happens, let's just be real with each other. Someone was baking up a little batch of the methamphetamine, a little of the crystal, baby. And I can't blame them. It's a good market around here, so it's not bad for them. You got to do what you got to do. ONIAC after them. If what? I don't understand what you want. Skyworks Solutions is reporting after close. I feel pretty good about these results for a couple reasons. Well, there's going to be a decline in revenue. There's just no doubt. But a big purchaser. I don't know why I can't think of the name, but a big customer for them is going to be Apple, and they actually posted better than expected iPhone results. Which pretty exciting for them, right? That means they likely are doing good things. Apple's going to have to buy the chips off of them too. They use their audio codecs quite a bit here, so Skyworks probably benefits from it. That's just what I got to see. That's their main customer, so keep an eye on them. Celanese, AECOM after them, and Primerica to follow up Monday. Man, that's some good stuff. U over F with a big red. That's a good sody. Good golly. Tuesday before, reminds me of my childhood. Tuesday before open, we've got none other than UPS. Failure to deliver constantly. They suck at their jobs. No, I don't want to be rude. UPS, gonna see it's not necessarily gonna be as beneficial for them here, and you want to know why? Well, we saw the massive spike, obviously, in e-commerce over the last several years. Not necessarily showing the same growth, so it doesn't necessarily help UPS in that aspect. Because not necessarily as many people are buying everything online. Because before they were forced to, now that they're not, people really do like shopping in store. It's kind of wild, and you see that with really demand in like, not only just normal stores, but like malls, shopping malls. People love shopping in store. They really do. Eli Lilly following them. I don't follow the company enough. I don't follow the biofarmers enough to know what's going to go on here. Workhorse, we've got Barrick Gold. I don't own anything gold in my account. You already know I don't. Come on now. But Barrick Gold reporting, how's the mining going? Who knows? Under Armour, actually do expect good things out of Under Armour. We saw really good results from a lot of these clothing companies over the last several weeks. I actually feel pretty decent about these results just because these clothing companies doing pretty well. And again, it stems from the fact that credit card debt has never been higher. Never been higher, by the way. And people are just buying money they just don't own. They don't own it, and they're still paying for it. And they're going to buy clothes like Under Armour because they want the name brand. Aramark. Hey, they deliver uniforms, by the way. They used to do that at work for me. I used to have to deal with them before. Fox. Yeah, just Fox. Really nothing crazy to say about them. Bentley. Zodis. Duke Energy, GFS, and then Datadog. I don't follow the Datadog enough. Speaking of dog, here's this dog staring at the window, probably going to start growling. Let me get him out of there. Okay, shoot him. I shoot him away so he didn't bark in your freaking ears, even though I'm way louder than that dog. You already know from the last couple of videos. The Wahoo gotcha. Wahoo heard around the world. AMC Theaters following them. A little anecdote here, and I love anecdotes, and I draw out these videos for no reason. I went to an AMC for the first time in my life last week to watch Haunted Mansion. There you go, Disney's Haunted Mansion. Pretty good movie, by the way. I will say that. I'll give them credit. Normally these remakes blow. Wasn't too bad. But the theater absolutely blew wiener. I'm telling you, this thing sucked on my little diddle. And you want to know why? We got the top row because it's the best. Everyone goes the freaking top row. You know the top row is the best. Don't even lie. And you know what is up on that top row? We get up there, and there's a protective glass barrier so people don't jump off the top row. It's like a 4-foot fall. And it was blocking half the screen. So it wasn't blocking the full screen. It was blocking half the screen, so there's a line in the middle of the screen the whole time, and there's fingerprints all over this effing thing. It was disgusting. Who's rubbing their dirty, meaty claws on this thing? Anyways, I don't like AMC. Get out of here, you meme stock piece of garbage. Your theater blows. Rivian following them is one of my focus stocks. Let's get back on track, Rivian. They're one of my focus stocks for one main reason. It's really just the performance of the stock here. Up 45% year to date, pretty significant. But when you look on an annual basis, kind of looking stinky over the last year. Obviously, when you look over the last 5 years, which really since IPO in 2021, oh gosh, really, which is only 1.5 years at this point, down 80% from the IPO price. Little bounce back, but not much. And why is that? Well, we look at the expected results. Expected to continue to lose a ton of money, a ridiculous amount of money. Negative $1.41 in an EPS standpoint is ugly, by the way. It's really bad. Little improvement year over year, right? It is a little improvement, but it's ugly. The revenue is where we go into the real business here. Again, they're not delivering a large quantity of vehicles just yet. Just being honest, they just really aren't. Expected under $1 billion, just under $1 billion in terms of revenue, which is massive growth though. We're talking about 170% growth, nearly triple what they did the year prior. Now, it's same thing I said with Lucid. The real thing that matters here is not only what they delivered this quarter. We already know what they delivered this quarter. Actually, the good thing is we kind of have an insight into that, based off delivery numbers. But what matters here is what they're guiding for. Is the demand going to continue to be strong for these vehicles? Or the big thing right now with these EV companies is how is pricing going to be impacted? If they announce lower average selling prices, that's going to hurt them quite a bit. What the heck is a FIDfolio? That's maybe the stupidest thing I've ever heard, Fidelity. Get out of here. FIDfolio? Makes me want to vomit. So that's what matters here. We'll be taking a look on Rivian for that specific reason. We've got Marathon. There's about 9 million companies titled or known as Marathon, but this one's also Marathon, by the way. Upstart following them. I hit a key. I'm glad I didn't stop the recording. Twilio. Look, there's some great companies here. I just don't follow them enough to tell you what you're gonna expect on these ones. Vroom, yet again, don't follow it enough. Rocket Lab, Blink Charging, a stock that's been absolute dog water, really over the last year, really has. Microvision, pretty exciting stock there too. Luminar, Lyft, I will touch on Lyft because we saw Uber report last week. What is this dog doing up on that bed? Just sniffing stuff. Lyft, or Uber reported actually pretty good numbers, surprisingly good numbers, but you saw the stock still fall as a result, as the numbers just really weren't good enough for the multiple that they're bringing in right now. Now, Lyft also trading at a higher multiple. I don't know how, what numbers they're going to have to post to be pretty good, but I don't like the service. Uber's a little more diversified, so yeah, I don't like Lyft too much. Sorry, had to shoo that dog away yet again. No, never mind. He's come right back to me. Dog loves me too much. Then we've got Clove after them. Anyways, Wednesday before open, none other than Roblox, baby. Life is Roblox. That's what DJ Khaled has always said. And it's a stock worth looking at. I'll be following it. Obviously, an incredibly high multiple on it. How are they doing? We got to see. Stock can move big. It's going to move big in either direction, in my opinion. I just think it will. Penn Entertainment. This thing's been kind of boring, but again, you know why? I do hold this one, and it's really mostly because the business in terms of gambling through the Barstool section. I actually think there's going to be pretty good numbers here from Penn. Now that they own Barstool, I think it's going to be pretty good for them. I don't know what the stock does. It's just been an absolute piece of garbage over the last year, though, so we'll take a look. Triple D after them. Okay, computer loves going. Wendy's. Now the food it's getting better. They're a little more hot now, but it's still not great. But it's not been great. So hey, I don't know. I haven't had Wendy's in forever because there's not really a Wendy's near me. So not much to say about Wendy's. We'll see what they're able to do. McDonald's put up some good numbers, but we'll see. Sneeze. I saved you from that. Vistra Energy following them. After close Wednesday, Disney. We got to talk about Disney. You want to know why? Again, we talk about a stock that's been trash. Down 19% in the last year to date. Only down about 3%. But really, when you look on a 5-year stack, this thing is down 23%. Down 23% in the last 5 years when the market's been way outpacing this. And here I am still owning this piece of garbage, huh? Let's take a look at these earnings, see what they're expected. A decline in EPS, 89 cents versus $1.09 of a year ago. Again, mounting costs still continue to rise up, not only due to inflation when you look at the parks department and added growth there, but really the main thing here is in terms of the streaming costs. They're still releasing new shows, which is great. It's good to have the new shows and it helps boost their numbers. But the Disney Plus numbers are what's going to be in mind here, regardless of this EPS line. The company's really transformed from their classic boring self to try to turn into a little extra growth here. And they're not really seeing too much of it, right? I mean, we're expected 22.48 billion off of 21 of a year ago, 4.6% growth, nothing massive. Trading in a relatively high multiple thanks to this decline in EPS that they've been showing over the last several years. I don't know. I don't know what they're going to have to do to get back into the good graces. Again, my long term has always felt good about the company because we're going to see the parks continue to show some recovery there, right? From a Disney World, Disneyland standpoint, the parks obviously you've got Hong Kong. We're going to see good numbers there, in my opinion, because people are still spending a lot on vacations. They're spending a lot on experiences. That's just undeniable there. But hey, it's the streaming business is kind of hurting them lately, I feel like. Now, the overall theater business, not this quarter, I don't think it's been great to them. They haven't had too much released this quarter specifically. We've got some bigger name movies coming up in the following quarter, so that's going to be massive for them in that perspective. But nothing crazy this quarter. So we'll see what they're able to do. I mean, I don't know. I just think they've been struggling to hit this EPS line, and I don't know if they do hit the EPS line. And I will say, though, I don't think there's much more downward room for this stock to go. I think 85 is really a good support level for them, to where at some point it's not going to be bouncing below that in my eyes, but it could. I'm not going to say it's not going to, but that's my opinion on the matter. I think it's going to do decent here. Over the next year at least. I don't think it's going to be falling below the 85, I should say. AMSC following them. The Trade Desk, Manulife, Illumina, and then U-Haul, baby. Thursday, look at this. We get a little insight. We've got CPI data coming out, which is obviously really important. That's our key metric for inflation. See where that's going. So that's going to have a big impact on the market as a whole. We'll see what these earnings do. So as a result anyways, but we've got Alibaba reporting fresh off the big spinoff, baby. Six Flags, peak quarter for Six Flags. No doubt we just started, spring into summer. Peak quarter for Six Flags, see what they're able to do. Hanes, I don't know, they make good undershirts, by the way, and decent underwear. I usually wear Hanes. In my eyes, the underwear is pretty good. I would get personally these performance boxer briefs. Really good, decent little pouch. Now the thing is, I will say, I'm not the best indicator because I'm not really packing too much. I'm just being honest. There's not too much that I need to have this little extra pouch for. But it does a good job holding everything steady. Now, results may vary. Let's just be honest. I don't know. I mean, my buddy Raekwon might say something different. That's all I could tell you. But I haven't asked him, so who knows. Krispy Kreme, following that. I love the hot sign, baby. Brookfield. Then we've got United States Foods. Whoever's ever said that way. U.S. Foods, Ralph Lauren. Again, I expect pretty good numbers from them. And then CyberArk. After close, we've got none other than Wheaton. Good for making bread. Credit Corp. What the heck is News Corp? Never heard of them in my life, and I don't trust them. What is this freaking cursive weird? I mean, who made this logo? They just wrote it in cursive. How lame can you get? Flowers, Foods, doesn't sound good. Don't like that. Ionic, and then, or IonQ, I don't even have a clue. Arlo, and then finally Friday before open, we have. Oh, sorry, my internet just went down. It's down. Just kidding. It didn't because it's Spectrum Brands. Their internet's always down. I don't use them for that freaking reason. Get out of here, Spectrum. F off. Have a good one, folks. Love you.